And if there's a chart that you'd like to see, ask me. I'll just bring it up. Well, before I did that, there's a short signal here. So 32.15.50 short. So 32.15.15 short is a signal on the TradeScalper, and I have the TradeScalper here as well on this chart. So if you're going to take this trade, it's very simple. Take a look here at the ATR. I would say 3.5 points is the move to the short side. So let me just put here a ruler. See what 3.5 points looks like so. That's the goal. And if within the next 4 or 5 candles, if it does not reach this target, 32.15.50 to about 32.12, out of the trade. We've given it enough time for it to work. So that's the signal, that's the target. We have a time-based stop, a catastrophic stop, and that's it. Very simple. We don't have to overcomplicate it. If you want to use your own type of filtering, that's great. There's nothing wrong with that. I don't have any filters that I could recommend as far as averages and MACDs, but that would be the goal. Right, anyone have any questions? Paul, let me know if you're okay with that. Alan, Steve, Jamie. Now also, when you look here at the Atlas line, if the market drops below the Atlas line, and the way that the Atlas line works is that there's 2 consecutive candles that need to plot in order for a signal to be seen or to be developed. So I know in advance that if this stays where it's at right here, this stays where it's at, and there's another candle which is here, and it also closes below the Atlas line, there'll be a signal to go short. So I can prepare in advance to go short, and it's an Atlas line short only if we have 2 consecutive candles closing below the Atlas line. So at the moment, we only have 1 closing. If this candle happens to close below the Atlas line, I'm not sure if you can hear the sound, but there's a sound alert that alerts you, an audible alert, and you'll see the text as well. Now, if it doesn't, let's say that this candle closes above, it resets. And so what you have is another signal to go long based off of 2 consecutive candles now crossing and closing above the Atlas line. So as long as this here closes below, we have a short. If it doesn't, and we have another candle here in about a minute, you'll see a long. So that way, we know and we can prepare in advance for a long trade or a short trade. Now again, if this comes down and closes here, we haven't yet produced 2 consecutive candles closing either above or below. So until that happens, you won't see a signal. So that's how the Atlas line produces the signals with evidence that the market is giving us 2 candles, whether it be a 5-minute chart. In this case, it's a 1-minute chart, but the rules are exactly the same. Nothing changes. So if we have 2 candles here, this will be a long, right? We have 1 and we have 2. So as long as we have that, you'll see a signal. And then again, look at the ATR. It says 3 and 3.9. So again, if you are conservative, 3 points, 3.5 points. Okay, so long, 32.15.50 to go long. It's actually the closing price of the second candle. That's the distinction of the price. So 32.15.50 is the entry to go long. It's the closing price of the second candle. 3.5, 3 points. So that looks like this. That's the goal. Right? ATR tells me that's the move. That's how I look at it. Don't overcomplicate it. If you have your own filters that are saying no, don't buy the market, it's risky, then great. We filter them out. I'm just using the Atlas line to produce the signals to tell me to go long. All right, excellent. Yeah, of course, if you want to take just 1 point or 2 ticks with a lot of contracts, right? Another way to play this, if you have a large account, right? If you have a large account and you want to just take 2 or 3 ticks with 3 or 4 contracts, there's nothing wrong with that. That's another way to play it. If you're just trading with one contract, though, I would try to go a little bit closer to the ATR or a little bit larger of a profit target. That's correct. So in this trade right here, we always have to look. Steve says, well, what about the stop, right? Let me just forward this. The stop, Steve, is always based off the current conditions, again, the ATR. So if I look at the ATR and it's 3.4, I know that my stop has to be at least this value, if not a little bit larger, to keep me in the trade, because what this is telling me is that the move on each candle from high to low is going to be equal to this. So if I have a stop that's 1 point or 2 points, that's never going to help me, because I'm going to get knocked out prematurely, or I'm going to get knocked out unnecessarily just on the whipsaw. So the stop always has to be larger, at least by a little bit, in comparison to the current ATR. So going back here, if I look at this signal to where the ATR was at 3.5 points, I would say that I'm at maximum should never risk more than 5 points on a trade like this. If the ATR is smaller, let's say it's at 1 point, then you should only risk 2 points. If the ATR is, let's say, at 2 points, you should risk a maximum of 4, but should never ever risk more than 5 points on any trade, ever. Alan, do you hear from others that they do not like an ATR over X? I do not like over 3. Most traders like the ATR over a set stop and set target because we're not guessing, Alan. I think that's your question. Most traders prefer to know what conditions exist, and they could tell right away whether or not they should be taking the trade. If this is too much volatility for you and the stop is too large, I already know it, and I'll stay out of the trade. If the market is too slow, usually if you look at overnight trading, or if you look at last year and the ATR is at 1 point or 3 ticks, that may be too slow, and I also know it's too slow, so it's impossible for me to try for points. I have to go for ticks. So use the ATR as a guide to tell you what you can expect from a move, and also to know the distance that these candles can travel. If you have a stop that's too tight, you'll get knocked out. Oh, I see. If the ATR is over 3, I understand. Okay. So if the ATR is over 3 instead of 5, obviously the risk is higher with the higher the ATR, and the more stop you have, the larger the stop you have to have, also the larger target you have to have. So if the ATR is above 3, and if you think it's too much of a risk to be trading, you can say, I'm not taking any trades over 3. There's nothing wrong with that. That's just being conservative and only trading when the market is normal and healthy and not over chaotic. That's right, Alan. Alan's absolutely right. So you can recover from a small loss or smaller loss, but it's very difficult to recover from a larger loss. I like that. That's exactly the way that you should be thinking, Alan. So if you only like to see the ATR at 3 or lower in order to keep that risk in check, then only take trades when the ATR is less than 3. Or if you want to go to a smaller time frame, let's say 30 seconds as opposed to a minute, you can also do that, because that'll bring down the ATR. Now, for the Atlas line, this resets it. So you see how this red candle closed below. If we have another candle that closes below, you'll see a short signal to go short at whatever closing price bar number 2 happens to be, but it seems as if we may have another flip-flop or a long where it closes back above. If this candle also now closes a second time consecutively above the Atlas line, we'll see another long signal, similar to what happened here, where it came down here to reset, then we have 1, 2. So if this is the reset, it never gave you the opportunity to close with a second consecutive candle below the Atlas line. This may be another opportunity to go long, and you'll see it in a moment. As soon as that candle closes, and if it stays above the Atlas line, it'll be an opportunity to go long. So you can already prepare for the signal before it happens, look at the ATR. If the risk is within reason, look at the target, the stop, and the entry will be probably close to 32.15 when this candle closes. All right, so there you have it, 32.15 to go long. Now the stop, again, has to be maximum of 5 points. If this is too much risk for you, then avoid the trade, don't take the trade. Let me just put here a ruler to show you what that looks like. That would be a target right there. Any questions? Anybody see anything else? Anybody going short? Going against this? Now again, the time-based stop element, I think it was a question about the time-based stop. I forgot who asked the question, but you don't want to be in a situation where the market's not doing anything and just chopping around. And that's why the importance of limiting the amount of time that you're exposing yourself to the market exists. So let's see what happens here with this signal. 2 ticks, okay. That's okay if you just took 2 ticks on the trade. There's nothing wrong with that. But 2 3/4 of a point would be the goal, right? That's where I really want to see the market move to say that it went at least 1 times the ATR, close to that. That's the goal. That is the ultimate goal. And then you can trail a stop. I have a trailing stop video. If you haven't seen it already, it teaches you the way that I like to trail a stop. And you'd be able to get out of the trade with a little bit larger of a target. I don't like to trail stops and believe that it's going to continue the whole day. But if you are able to take a little bit more on a trailing stop, that's fine. So far, this has been 1, 2, 3, 4 candles in the trade. And we're probably right at a couple ticks in profit territory. I would say if it doesn't do anything by the next candle, as far as reaching the target, I would look to exit the trade, right? Because it's really just going sideways. So after 1, 2, 3, 4, by this candle here, if nothing happens, if it doesn't reach that target, which is here, my recommendation is we've been in this enough time, let's get out of the trade. Look to take a break even, a small win, a small loss, which is acceptable. What we don't want, and I'll tell you this from experience, the large losses is what really hurts. And we're trying to avoid that at all costs. We don't want to have a loss that will, like Alan said, ruins the day, right, when it's a large loss. So you can recover from a small loss. That's not really going to hurt you. What's really going to hurt you as a trader is if you hold on to these losing trades for far too long. So time-based stop, prove it stop, pivotal stop, catastrophic stop, they're all there to protect you. All right, Alan, any questions for me? Paul? Steve? All right. So I don't see currently any signals on the TradeScalper. I'd like to see another scalper move here to give you an example of maybe a long on the scalper, on the TradeScalper, and that way we can finish the day and our webinar here with the next trade here. Isn't that always the case, Alan? Seems like they're always out to get you, right? Steve, are you using market orders or limit orders when you trade in the demo or the sim when you're practicing? Because with a limit order, you will never get slippage in the simulator or in live. You should never get slippage. If you're using market orders, either way, you'll get slippage. Well, you should have no slippage whatsoever when you close it. So, for example, if you placed a trade here, let me show you this here for a sec. If you placed here a trade, right, to go long, and it's a limit order,
submitted.
As an example, right? And you have here a limit order
Order
to
submitted.
sell once you get filled. When this hits your limit order, there should be no slippage whatsoever, Steve. right? So if you get filled,
Order filled.
this is the exact fill of the slip without slippage. And when this
Order filled.
gets hit, there's no slippage. It's no slippage when using limit orders. If you use a market if touched, which is green as opposed to blue, this is
Order submitted.
MIT, this converts into a market order. So yes, you will get slippage, maybe even slippage in your favor, depending how the market is working. Or if you exit the market,
Order submitted.
or it depends, right? If you enter short first and then you exit long, this will convert into a market and you should expect slippage. But MIT, market if touched, it acts like a limit order how you place the trade, but it converts into a market order, Steve. When you manually close, yes, it's getting out at market, Steve. So if I was in this here, for example, if I was short
Order filled.
and I close this out here and just click close, this closes your positions at market. This converts into a market order.
Order
Like
filled.
that. That's a market order. And when you click close, it also closes all your other positions on the dome, so you don't have any outstanding positions that can possibly get filled in the future. So yeah, so if you're using the close button, you have to think about how they're executing the trade, which is at market. Okay, so this is a TradeScalper signal, 32.20.75 long. That's it. 32.20.75 long, or as close as you can get to it. Don't chase it. Long on the TradeScalper. That's it. Simple and straightforward. Yeah, 2 points. I would say that's a good target, 2 points. If you even just want to take a point or a point and a half, and you have to remember, with scalping, it's usually not in points, but because we have the ATR at this high number, right? It's not saying 3 ticks or 4 ticks, not just at a point. That's the reason why you can take a little bit more. But sure, if you want to just take a point, thinking that it's just scalp trade, no problem whatsoever. That's completely fine. What I wouldn't do though, and this is very important, I would not chase it. If you were able to get 32.21 or 32.20.75 or even better, great. But if you entered long here, already 2 points above where the signal occurred, I think now you're chasing it and you're not really positioned well as an entry. All right. Just expand that out like that. And 2 points will look something like this here. And the TradeScalper course and the training, it explains how the signals are created. It explains everything you need to know about managing the trade. We provide the training videos and the live instruction. So we try to really give you all the information that you need for this. Correct, Steve. That's accurate. 2 points based on the ATR is what you can expect. Now, if you look, Steve, at the ATR, it's getting slower, meaning the candles are getting smaller. It's now below 2 points, right? So what that means is that your target of 2 points may not be hit, may not be met, right? It may not reach that point. So if you decrease this to 1.75, try to get the ruler here, like so, that would be the goal, because now you see the candles are getting smaller, the market's tightening up, we're adjusting our target because the market is slowing down. But if it increases, let's say the volatility increases, I wouldn't adjust my target, I would keep it the same. It's a great question. So if you miss a signal on the scalper, how long can you wait until before it's too long? Well, we have to think about it in 2 ways, Paul. It's a great question. First, has it already hit the target? So if it hit the target already, you have to essentially say you missed the move, right? Because now if you take the same trade twice, we'd like to see the signal do this, or the trade mimic itself twice. And I don't think we can always count on that happening. So the first thing we have to consider is whether or not the target has already been met or hit. If it has, then taking the trade a second time is risky, okay? But let's say that you missed the signal and it hasn't hit target yet, but now you have an opportunity to get in. Let's say 5 minutes later, can you do it? Yes. The answer is yes. There's nothing wrong with entering. If it hasn't hit the target as of yet, 5, even 10 minutes later, it's still underway, waiting for it to do something. But if it has already hit the target, I would let it go. Or I would be careful if you're going to take that trade again, a second time. So, for example, here, the entry hit the target. If it comes back down, will you take it again? And I would have to say no. It's already made the move. I look for the next signal. I would not take this a second time at 30, 20, 20, 75. All right, everyone. Hopefully you got to see the TradeScalper in action, the Atlas line in action. Email me if you have any questions. July 22nd is the next mentorship class, which includes all the software, ABC, roadmap, the news indicator, the at the open, the price action scalping, multi-lines indicator, the X5. So we package this where you get all of the courses and all the software in one bundle, and we also provide you videos in advance before the class begins. That way you can start learning and start trading and practicing even before the class begins. So if you have any questions, email us, give us a call. I'm happy to go over it with you. If you want to learn more about trading, visit DayTradeToWin.com. Subscribe to the DayTradeToWin YouTube channel, the next mentorship class where we cover all of these methods with lifetime licenses for the software.